Were you just denied for a VA loan? If you were, do not automatically assume the VA said no. Countless veterans receive a denial letter and immediately think their housing plans are over. They think their credit is too low, or their file is too messy, or simply think aren't ready to buy. But the reality is, you may not have been denied by the VA at all. You may have just run into something called lender overlay. Before you assume your VA benefit is off the table, you need to ask whether the denial was based on actual VA guidelines or if it was just an internal lender overlay. Now, imagine two veterans with the exact same file and credit score of 615. One bank declines the loan completely. Another lender looks at the exact same file and improves it. Now, how does that happen? It happens because the VA does not set one universal minimum credit score. Let me repeat that. There is no government mandated minimum credit score for a VA loan, but individual banks and lenders are allowed to create their own internal credit score requirements to protect themselves. That means when a lender says that you need a 620 or a 640 to qualify, that is highly likely that the lender's personal rule, not a universal VA rule. This is exactly why good VA buyers get stopped way too early in the process. A veteran will be able to apply with their local bank or retail lender, get hit with a denial because they have a 610 score, and just accept it as fact. They give up. They go sign another 12-month lease. But one lender says no does not mean the VA benefit is gone. It just means you didn't fit into that specific bank's risk box. Now, let's be clear. Credit still matters. A lower score means the underwriter has to look harder at the rest of your file. But the full file matters just as much as the score. The VA wants to see the whole picture. They look at your payment recovery. Have you bounced back from past hardships? They look at income stability, your current debt structure, your documentation, and overall loan risk. One of the most powerful tools in a VA loan is residual income. This is the actual cash you have left over at the end of every month after all the major bills are paid. If your credit score is bruised, but your residual income is incredibly strong, you have a solid history of paying your rent on time. There are lenders who specialize in manual underwriting who can work with that file. So before you give up, get your full file reviewed. Ask your loan officer, did I fail VA guidelines? Or did I just fail your bank's internal overlay? If you need a second look at your scenario, use the link in my description and book a one-on-one mortgage strategy call. We can review your payment history, your residual income, and build a custom plan strategy to get you to the closing table. Get the data and avoid the hype.